Going to use the IRS EITC assistant to determine whether or not we're eligible for the earned income tax credit. So to summarize, the earned income tax credit helps low to moderate income workers and their families get a tax break. They can claim the credit to reduce their tax liability dollar for dollar, and you might also get a larger refund. The IRS has a lot of tools and resources in place, both to make sure that people don't abuse the earned income tax credit, because it is one of the most commonly abused tax benefits in existence. A lot of people try to qualify for the earned income tax credit or claim it even if they don't qualify. So we'll put links to this IRS page where you can do this on your own in the comment section. We'll also link to other EITC resources, specifically articles that we've written about the earned income tax credit. In this, we're simply going to walk through the earned income tax credit assistant in a hypothetical situation to see how we would be able to qualify for the credit. So you do need your income statements for the tax year, documents that showed taxes that were withheld, and expenses or adjustments to your income. So you'll also need to kind of have some basic understanding about your qualifying children, things of that nature that you probably already have pretty handily available. But if you walk through this assistant, you might find other things that you would need that aren't prompted here on the screen. So you don't need to provide anything of, any personal information, like you're not going to be asked your name or your social security number. None of the information that's in this assistant is saved or recorded. It's simply an automated version of the calculations that you could do on your own using the IRS publications. So the first thing that you'll do when you come to the Earned Income Tax Credit Assistant, you'll see these 5 areas, right? So general information, filing status, adjusted gross income, and qualifying children, and then the results. And so we'll walk through this. We'll kind of see how we can make adjustments and break it. Since we're recording this video in 2023, the most recent tax year you could select eligibility for would be 2022. So let's select that. The first question that you'll be asked is whether or not you're a U.S. citizen or a resident. If no, then you'll see you don't qualify, but let's change this answer to yes. Do you have a valid social security number? And again, if you don't have one, then it'll prompt you that you're not able to take the credit. If you do, then it just keeps pushing you forward to the next question. So are you filing IRS Form 2555? Nope. You can't claim the credit here. However, we'll just change that answer to no, and then we'll keep going. Can you be claimed as a dependent on someone else's tax return for the benefit of the earned income tax credit? So you may be able to, but maybe not. There's a limit to your ability to, actually, if you can be claimed, then you don't qualify. Sorry. So we're going to select the age at which, so in my situation, I'm between age 25 and 64. So we're going to see where this goes. Now your tax filing status. Do you know your tax filing status? Well, what was your marital status? So you can say you were married, or you could say you were legally separated. If you're a surviving spouse, it'll give you different questions, right? So do you intend to file a joint return? If you select no, then you may or may not be able to qualify for the earned income tax credit if you were not legally separated in this situation. So, you may be able to claim the credit under these situations, but let's just say that we're married filing jointly. And let's see, does your spouse have a valid Social Security number? We'll say yes, and we're going to claim two children. Now, for the purpose of the earned income tax credit, realistically, the maximum amount that you'll receive is based on 3 children. So, if you can put 4 or 5 or more if you wanted to, but 3 really is going to be the max that you'll get the most money for. So let's go ahead and put 3. So we'll go to next, and we're going to estimate adjusted gross income. So we're going to keep this simple, but we can declare any kind of, let's say work where federal income taxes were not withheld, self-employment income, wage income. So these are types of earned income. You'll notice that it doesn't have things like dividends or capital gains. None of that is earned income. We're talking about earned income up here. So you get to enter, let's just say $50,000, right? You can also say how much money you contributed to your 401k. So let's say you added $5,000 to your 401k. We're going to go down here, and it's going to show us AGI, $45,000. AGI meaning adjusted gross income. Now, if you put in too high of a number, let's say we put in $100,000, this should be $95,000, and unfortunately, that would put you over the earned income tax credit. So if you're trying to figure out what you're going to be able to claim for most taxpayers, you're going to find out pretty quickly right here. So you can go ahead and do that. You can also enter any of these. Let's see. These are sources of income that would count against your earned income tax credit, like unemployment or investment income, maybe, for the earned income tax credit. So you could put in, let's say, $5,000. You would still not qualify, right? So let's go back to the $50,000 example. And we'll back out this investment income. So let's say we had deductions for an IRA. So now we have $40,000 of adjusted gross income. Now, notice that you can hit the back button. So as we go through this, if you wanted to make an adjustment like, oh, shoot, I forgot about my IRA contribution, because that might be a decision where you can actually go back and forth and say, let me take this out, and then if for some reason I don't qualify because of my income, I'll toggle this back on. Because an IRA contribution, you can make this all the way up until the tax filing deadline. So for the 2022 tax year, that would have been April 18th of 2023. For 2023, that would be the tax filing deadline in 2024. So you can't do this for all of these expenses. Generally speaking, like any 401k contributions, for example, you kind of pay as you go. You can't really catch that up after the end of the tax year. But with an IRA, you can make that contribution, and this could be a very helpful tool in order to determine whether or not you make that IRA contribution, because this right here could be making the difference on whether or not you get this tax credit. So let's go to next. Now we're going to talk about the qualifying children. I indicated that we have 3 qualifying children, and we're going to go through all the questions that you would see in schedule EIC, which is the schedule that you would use to claim the earned income credit. So has this child lived with you for more than half of the tax year? Can someone else claim this child? So if you start answering the wrong questions, you might not be able to claim a credit for the child. Or your child does not qualify because they did not live with you more than half of the year. So, so you can kind of toggle through this to see, like, how you might disqualify your child, or you're kind of like playing with this, right? Is this child married and will file a joint return? Nope. Are they totally disabled? No. They're my actual child, 18 and under, and they have a valid Social Security number issued before the tax return due date. So this child qualifies. We'll go through the same rigmarole with child number 2. And we'll say that that child qualifies. Now, let's just say that this child happens to be between 19 and 23. Were they a full-time student? Yes. Do they have a valid Social Security? Yep. Okay, they qualify. But if they weren't a full-time student, then they don't qualify. Based on your inputs, you have 2 qualifying children. Let's go ahead and change this to 3. So now, right here it says you have 3 qualifying children. You've reached the maximum number of qualifying children that can be claimed. So if you put in 4, or if you put 5 or more, you would probably stop at your 3 qualifying children because you're not going to get any more benefit for that. Now, if you have that many children and you're coordinating earned income credit with someone that doesn't live with you, so if you happen to have 5 children, but 3 of them are children that you have with someone else and you're not on bad terms with them, you could coordinate with them which children you're claiming the credit for so that they can claim a credit for the other children. Obviously, if you're not on good relationships with your exes, you probably won't be doing that. So let's hit the next button, and then let's say, oh, based on this information, this taxpayer situation would be eligible for a tax credit of $29.92. So if I go back to my adjusted gross income, if my $5,000 IRA contribution made a big difference, and it doesn't look like it did in this situation, but maybe. So my increase of income basically brought that refund down about $2,000. So that's where you might toggle in and say, hey, should I make my IRA contribution knowing that I'm going to get most of that money back with my tax refund, right? So then it shows you how you can file for the earned income tax credit. So the IRS has lots of resources. You can use the IRS Free File program from January through October. You can file in person at a volunteer income tax assistance clinic. You can file on paper. You can file an amended tax return. So even though you might have filed your 2022 taxes, if you are just now learning about your earned income tax credit, you can go ahead and file an amended tax return. And again, if you go through this and you find that you might be eligible for $3,000, you can just hire an accountant to prepare your amended return. Probably cost you a couple of $100s, and it will probably take you somewhere between 2 to 3 months to eventually get your amended return back. So I can't guarantee the return time. It might be quicker, it might be longer. It really does depend on when you file during tax season and the IRS resources that are available at the time. I know that during the coronavirus pandemic, it was a very long time before paper filed amended returns were being processed. So that's all we have for this video. Pretty straightforward walkthrough of the Earned Income Tax Credit Assistant. I'll put links to this website as well as other resources we've produced in the show notes. So if you like our YouTube videos, please hit the subscribe button and tell people that you know that you think might benefit. And if you have any questions, please post them in the comments section. Thank you very much and have a great day.